Good morning, good afternoon, good evening, wherever you are. I'm David Wu. Welcome to the Money Game, where we make actionable predictions about the big stories shaping the world today. If you're interested in making money, you are in the right place. If you're not, this program is designed for anyone who's interested in learning about what makes our world tick. Please subscribe at davidwunbound.com if you haven't done so already. To my subscribers, I owe you an apology. Ever since I got my third booster shot 6 weeks ago, I've not been feeling the same. If I've not been writing more or finishing the podcast on time, it's really because I'm exhausted most of the time. My doctor tells me this will pass soon, and I certainly hope he's right. Please bear with me. Because of my lack of energy, I find myself watching a lot of TV lately. I watched Squid Game on Netflix like 100 million people did apparently in the past month. I started watching it as an escape until I realized at the end that this was no escape. It is certainly frightening that the South Korean series that broke all Netflix records is about rich people keeping themselves entertained by tricking poor people into killing each other. It is clear that income inequality and class struggle are one of the biggest challenges of our time. On that subject, a new U.S. survey this week showed 30% of Americans earning less than $50,000 a year have depleted their savings and are now facing actual financial hardship. I wonder how many of these people are watching Squid Game thinking that it speaks to them and it speaks for them. Let's get on with the program this week. I want to talk about COVID today. As you probably remember, I've been arguing over the last month that the risk was that we're going to see a resurgence of COVID as we head into the fall because of the waning effectiveness of the vaccines. So far, this has not been playing out exactly I had predicted. So therefore, I decided to go back to the drawing board, going through the numbers to see if I've actually made a mistake. Actually, you'll be surprised by my findings. The average daily new confirmed COVID cases globally fell to 400,000 last week. This is near the trough associated with wave 2 and wave 3. And from that point of view, one is tempted certainly to draw the conclusion that we've overcome wave 4 just like we did with the first 3 waves. Even the United States, which had been hit especially hard by this 4th wave, has seen the number of new cases dropping by almost 50% just in the last few weeks to now just 80,000 a day. Against that backdrop, equity investors have been piling back into hotels, restaurants, and the leisure sector more generally. As you can see, ever since COVID cases peaked in the US, you know what? The leisure hospitality sector has been outperforming S&P 500 by almost now 7%. Unlike the first 3 waves, this 4th wave has been largely contained by, of course, vaccines and vaccination. From that point of view, you could argue this has really been about the triumph of human ingenuity over the deadly virus. By the way, as of last week, about 7 billion vaccines have now been administered relative to a global population just over 7 billion. In other words, we're making good progress. Even Asia, which until recently had been lagging behind Europe and the Americas when it came to vaccination, is catching up very, very quickly, with countries like New Zealand and Australia having already achieved about 50% vaccination rates. With increasing confidence that COVID is under control, governments around the world are in a hurry to open up again, especially ahead of the holiday shopping season. This past week, New South Wales announced that fully vaccinated Australians would now be able to visit Sydney again. Okay. In the US, most US states no longer require fully vaccinated people to wear a mask. Okay. UK, Denmark, and Norway have ended all COVID-related restrictions, and Japan even ended its COVID state of emergency 2 weeks ago. Easing concerns about COVID is strengthening the bullish case for the global economy. For example, it is generally expected that with COVID cases coming down in the US, we ought to see basically renewed pickup in hiring activities in the important leisure and hospitality sector, which had been stalling over the last couple of months. With a stronger labor market, the bulls want to believe that this means the Fed will be able to start hiking rates more quickly. As you can see on this chart right here, in the space of last month, the market has built into nearly 2 Fed hikes between now and 2022 in the pricing in the rates market. Not all stocks love higher rates, but history tells us that banks should be a big beneficiary of higher rates, especially given the fact that interest rate margin of US banks at the moment is at record low. So no surprise there over the last basically few weeks as rates basically rise, so have bank stocks, including Bank of America stocks. As a child, my favorite word was no. According to my mother, I would do the opposite of everything I was told to do. I made a career on Wall Street for the last 20 years challenging market consensus. So I have to ask myself, what could go wrong with this bullish case? A fifth COVID wave certainly will kill the bullish case. I've been telling you over the last basically month that increasing number of Americans are at risk of losing the protection from the vaccine as the effectiveness of the vaccine wears off. So how long does it take before vaccines lose their effectiveness? There have been obviously several studies that try to answer this question by employing trial groups and using antibody readings as a measure of effectiveness. I decided to take a different approach, call it macro if you would like. Since my interest is the US, I decided to look for a pattern at a state level. For the 50 US states, I calculated the cross-sectional correlation between the number of new COVID cases and the share of the population at the state level that was vaccinated during a particular time interval. The chart here provides the results of this exercise. The correlations are negative, as generally more people vaccinated means fewer people will get sick, obviously. However, you can see the correlations are the strongest at the 5-month interval. Interesting. This is a bit faster than the finding of the recent Pfizer study that suggests effectiveness wears off after 6 months. I made this chart here to help me better explain what I'm trying to say. So here we go. On the y-axis, what we got here is average daily new COVID cases per million people at a state level. On the x-axis here, we've got population that was vaccinated over the past 5 months. So for example, if we take a state like Alaska, okay, currently 13% of the population in Alaska was vaccinated over the last 5 months. Of course, many more people in Alaska are vaccinated, right? About 51% of Alaskans have been vaccinated, but only 13% of them have been vaccinated over the last 5 months. In other words, they're the ones who are still basically have not seen the effectiveness of the vaccine wearing off. Now, to the extent this is a relatively low number, this is the reason why presumably Alaska right now is seeing basically very high level of new cases relative to its population. But the point here is that all the states right here, okay, are going to be slowly moving here, okay, over the next month or 2 months. In other words, California is going to be more like Alaska in a month's time, unless every Californian that's vaccinated at risk of losing the effectiveness of their vaccine were to go out and get a third booster, which clearly is not going to be the case because the FDA is only recommending people over the age of 65 to basically get the booster. So from that point of view, it's reasonable to think that over the next basically few weeks, the US number should be basically start shifting up as more and more states find themselves in the same position as the likes of Montana, Wyoming, North Dakota, or Alaska for that matter. Of course, this is my conjecture based on my analysis. The question you might ask is any evidence that suggests that this process has already begun? And I would say the answer is yes. Now let's look at some of the blue states, okay, the so-called democratic controlled states in the northeastern corner of the country, because those states basically are the most vaccinated states in the country, and they also happen to be, basically the earliest. And what's interesting is if you look at a state like Vermont, for example, which has the distinction of being the most vaccinated state in the country, what's interesting to me is that over the last few weeks, we've seen a resurgence in a number of COVID cases. Even if you look at, states like New York and Pennsylvania that also have relatively high level of vaccination rate, they are not seeing much of a decline in terms of number of new cases. That, to me, is very, very interesting. I've said this before, and I'm going to say it again. I think, Biden's policies when it comes to COVID is inconsistent, and this is bad news for the economy. And this is the reason why. Think about this. So far, the U.S. is only giving out the third booster to people over the age of 65. This is already leading to an increase in COVID cases among fully vaccinated people. And this, unfortunately, is only going to harden the resolve of the anti-vaxxers who are going to say, well, if fully vaccinated people are getting sick, you know what? Why should I get vaccinated now? Meanwhile, Biden is saying, okay, to the anti-vaxxers, go get vaccinated or you're going to lose your job. I think the result of that is that a lot of anti-vaxxers might just decide to quit their job before basically agreeing to getting vaccinated. The media is, of course, latching onto a few stories, but I think that these represent only the tip of the iceberg. But you might have heard this story, okay? The largest, healthcare provider in New York State decided to lay off 1,400 people over their refusal to get vaccinated. LA, okay, is requiring all city employees to get vaccinated literally by October 19th. And as of last month, 10% of its employees, including 3,000 police officers, are not yet vaccinated, okay? Last week, Southwest Airlines canceled 1,500 flights. What you may not know is that this happened one day after the pilot unions sued the company for unlawfully imposing new conditions of employment. In other words, basically, that's contingent on full vaccination, basically by December 8, 2021. Okay, maybe there are rumors, maybe it's not, but it sounds to me that basically what happened to Southwest Airlines is that the pilots called in sick as a way to protest against the airline's decision to comply with government-directed mandates. The possibility that anti-vaxxers might choose to exit the labor force as opposed to getting vaccinated is supported by the latest labor market data that shows that quit rate, the number of people resigning their jobs, actually jumped to a record high in September. Now, I'm not saying that anti-vaxxers leaving the labor force is the only explanation, okay, for actually this spike in quit rate, but certainly the spike in quit rate is consistent with this view. You might say to me at this point, David, hold your horses. How many anti-vaxxers are there in the US? Are there enough of them to even make a difference at a macro level? Now let's basically look at this question, okay? Think of this circle as representing the entire US population. We know 57% of Americans are fully vaccinated. We also know that 18% of the population is under the age of 15. In other words, these are people who cannot get vaccinated because it's not yet available for children, okay? That leaves you with 25% of the population who are basically adults but have not yet been vaccinated. Now, let's just say 5% of them cannot get vaccinated because of medical reasons. That leaves you with just 20%, okay, of the population that is not vaccinated but with no good reason. What's 20% of the population? Well, the US population is roughly around 320 million people. So you're talking about 60 million Americans who have not yet been vaccinated, and they have no reasons not to have been vaccinated. Now, 60 million, I won't call them all anti-vaxxers. Let's just call half of them anti-vaxxers, the other half being just lazy. So that leaves you with 30 million people. What is 30 million people? 30 million people happens to be 20% of the labor force. Even if you just take another half of that, that will be a very big number. So no matter how we cut it and dice it, the effect of the anti-vaxxers is going to be very, very big for the US economy. What's more, as I've been telling over the last couple of months, the US labor market is already extremely tight as it is, okay? Look at my favorite chart of the US labor market here. In orange, you've got the unemployment rate, which is currently just south of 5%, okay? In blue is the number of small businesses reporting that vacancies are difficult to fill. You can see the two lines are normally highly correlated. I happen to trust that blue line more than the orange line. If the blue line is correct, guess what? It will suggest that the actual real unemployment rate is probably closer to 3%, if not even 2% at this point. To underscore just how tight the labor market is, all you have to do is look at this chart here. You can see that wages are now growing at a rate of 4.7%, which is the highest in more than 10 years. In fact, the last time it was this high, it was in 2006. In fact, this chart alone shows you that the Federal Reserve is way behind the curve. In fact, according to this chart, the Fed funds rate, instead of being at 0%, should be closer to 3% or even 4% for that matter. The most important lesson I learned the last 18 months is that unless we know what's going to happen to COVID, we have no idea what's going to happen to anything else. Right now, my view is that COVID cases are likely to go up rather than down, okay? And this is obviously dictating my views about inflation, about the outlook for growth, everything else for that matter, okay? I realize that, a lot is riding on a single assumption. And perhaps you want to wait until we see the actual turn before you jump on this, basically thesis that I'm advocating right now. But what I can tell you is that just in the last week, we're also starting to see some countries in Europe starting to see basically, number of new COVID cases drifting higher. In fact, this whether is the UK, Germany, Ireland, Denmark, even the Netherlands. So my view is that it's very possible we're getting very close to that infection point, especially as the weather starts to get colder. So far, the weather hasn't been okay. The bottom line is that I still like owning Pfizer, which I see as the biggest beneficiary, of a potential resurgence of COVID cases that will likely lead to a more general use of the third booster. I got in the trade at $42 a share. If this thing were to go down to 40, I will double my position. Now, I'm not saying that we have to be in complete agreement about the outlook for COVID for Pfizer to get interesting. You should see COVID, Pfizer as even a hedge, I think a very good hedge against such a risk, especially if you are long, if you're long the stock market. A quick update of my other positions. I shorted the euro against the US dollar at 116. We're currently flat right now, okay? The dollar actually went up a bit and then retraced a step basically towards the end of last week. I shorted, IWM, small cap stocks at 220. Is now down 2% given the massive rally in stocks that we saw on Thursday and Friday, okay? And the short Richemont position I initiated 2 weeks ago, guess what? I got stopped out. The stock basically rallied off easing concerns about China slowed down. You know what? I still think China is going to slow. This is, I will be looking for better levels to re-enter this position. That's it from me this week. Talk to you next week.